So a while back, we did a video on the definition of taper. That topic has become even more important as we sit here in the early stages of 2022. And the reason for that I think it's more important is that the Federal Reserve in the course of the last couple months has now realized how wrong they got the inflation narrative. And when we did the taper video a few months back, at the time, the timeline around the tapering or the removal of stimulus from the economy, the removal of the printing presses running and creating new currency, was that they were going to go from $120 billion of printing to $90 billion of printing a month, right? And that was going to happen by the end of the year. But they went significantly beyond that, right? They realized that they were stimulating way too much. So we are at the stage now where they went from 120 billion down to 30 billion. And they're talking now that their early stages of 2022, they may remove all new stimulus. So instead of, let's just go back and rehash or refresh a little bit. So as the Federal Reserve prints money, right now they're printing money in excess of what they need to put it out there in the economy, right? So they're still putting new liquidity into the market, okay? So that's the first stage of ending the taper. The second stage of ending the taper is where they go from maintaining all of the assets that they bought, which are primarily bonds. So instead of printing new money, let's just go to where the only thing we're doing is we're making sure we don't let any of the bonds we own mature off our balance sheet and go back into the marketplace. So we're going to be at that stage relatively quickly. We're going to be down to where all the new money that they're generating is going to come to an end, right? And all they're going to do now is they're going to maintain their balance sheet. So they've grown their balance sheet from 4 trillion to 8.5 trillion in the last year and a half. Very soon, we're going to get to where that growth stops, right? And that's a very important thing. We really did not think we were going to get there until the latter stages of 2022. And now we're going to be there in the earlier stages of 22. All right. Now, why is that important for investors? I think the primary reason that's important for investors is that stimulus is going out into the marketplace, right? It's driving up assets. It has to go somewhere. It goes into our pockets in some way, shape, or form. And we spend that money somehow, we being the average American citizen. And that's creating economic growth. Slowing it down faster is removing some of that stimulus. Now, I still think there's a lot of great things going on in the economy, and I do think the economy continues to be strong. But one of the fuels for that economic strength is being removed a lot faster than we thought it was going to be removed. So that taper video that we did a few months ago, I think is even more important for people to understand that topic, because the acceleration of it, the pace of the acceleration of it really is just an indication of how strong the economy is, and quite frankly, how wrong the Fed got it, right? And how quickly they had to move.